Good morning. Good morning. It is Monday, March 7th, and we are this is the Pill Method Club on Clubhouse, and we are in the room, How to Pay Off Mortgages in 7 Years. We're also live streaming to YouTube, Facebook, Twitter, and LinkedIn. Well, LinkedIn is having a little problems today, but hopefully LinkedIn will get themselves back online, and we can be broadcasting there too. And it looks like it's been fixed. Excellent, excellent. LinkedIn is online as well. And folks, if you want to see what we're doing, please go to ICE 10K videos.com, ice10kvideos.com. That will take you directly to our YouTube channel, and we're going to ask you to participate in helping to get this message out. How can you participate? You can click on that button that says we want to subscribe, and then click that notification bell so you'll always know when we're putting up new content, and then share the room and like the videos. When you do those things, you are participating in getting a message out that will transform this world financially. Did you realize that the interest-bearing loan is the most ubiquitous financial tool on the planet? All right. When banks offer loans, that is the most popular product on the planet. All right. So when we're talking about those products, we want to be able to understand it. We want to know how it works for us. And for 88 years, we've been amortizing loans like we have now. So we're going to learn how to play this game by the rules. What do you say, Jared? What do you say? Shouldn't we learn how to play this game by the rules?
Absolutely, because if you're not understanding the rules, then you will always get played. And, I'd rather be the player.
Jared said, "I'd rather be the player than get played."
Absolutely, and the banks, for lack of a better term, they've been playing us with these refinances. They've been playing this with 15-year mortgages. They've been playing this with basically prepayment penalties and scaring us into saving interest costs. So you're going to really get a lot of information that's going to change how you look at the banks, how you look at amortization schedules, how you look at interest rate versus interest cost. So this is a very, very important room. So be thankful you're in here right now. Don't go anywhere. Make sure you click that greenhouse at the top and follow the club. When you follow the club, read the about description. This will give you the Cliff Notes version of what you can learn in today's room. And this is a very interactive room. So Don's going to quickly introduce the P.I.L.L method and what you're going to get out of today's room. And while he's doing so, make sure you raise your hand, come on stage. As Don mentioned, there's the consultation that he could be charging for this information is in the hundreds and thousands of dollars, right? So we're getting free access to this information. And when you come on stage, not only will you be blessed with information about your financial situation, but the audience will be blessed because they will be able to understand the P.I.L.L method even better through the exchange. So feel free to raise your hand, come on stage, ask questions. There are no dumb questions. And if you're on YouTube, Facebook, LinkedIn, or Twitter, feel free to write it in the chat, and Kirk will make sure that your question is addressed. We also have the chat option over in the lower left-hand corner. So if you click that number 2, you'll see my first chat that explains if you want to see these examples live on your iPad, desktop, or laptop, go to ice10kvideos.com and choose the panel that says live. That way you can be in Clubhouse while at the same time be on your computer and see these examples live. If you want to come on stage on Clubhouse, ask a question, you can see these examples on your screen. So be excited. You're in for a great treat. And go ahead and click that share button and share this room to your colleagues. Share this room to the hallway. Throw some gym emojis. And be excited, man. We're about to really get into some great information. So don't feel afraid to ask a question and invite a friend. So I'm going to pass the mic to Don so he can introduce the P.I.L.L method and what you can get out today's room. And then we're going to do some quick moderator introductions and get into the first question or the first example. So over to you, Don.
All right. Thank you very much, Jared. Listen, we're going to get into the magic of client of customer service. 10K, I know you're busy this morning, but are you available just to say a couple of words? Because you know,
this is gonna be a great day. You know, work on the 1 year deal right now.
Hey,
Love you guys. Here support.
Hey, listen, man. I wanted to show the level of support from 10K cards right now on my 10K card here. That's pinned to the top of the room. We have an event that has expired. I'd like to put the new event on for war, and on my don10k.com is my link for war. So if you could put that on have your team take that off this one pin to the top, take off the expired one and put on the new one. I would appreciate that very much because we want to promote war, especially when Credit Goddess comes on and starts talking about it this morning. This is some exciting stuff. So anyway, folks, my name is Don Daniel. And I'm the founder of P.I.L.L Method International, a better way to eliminate debt. And we have found that over the years, people have been paying 75% more interest than they need to, and you don't have to. We have found a way to beat the bank's computers at their own game. You see, they have what's called an amortization formula that turns a 3% mortgage into paying back 51% of what you borrowed in the form of interest. Meaning this, if you have a loan at $200,000 for 30 years at 3%, the bank wants $103,000 in interest over that 30-year span. Folks, that's not 3%. That's 51% all day long. And this is what we're talking about. We want to understand what's going on for the first time in our lives because we've never been educated as to how loans work and how banks make their money. But once we become educated, we can do something about that. We can use our current budget and pay 75% less interest to pay off all of our debt in an average of 7 to 9 years. Folks, that's what we're going to be talking about today. How can we use our current budget and not sacrifice lifestyle? You mean I don't have to take money away from my kids? I don't have to take away money from their fun, or they can still go to their travel soccer or baseball or whatever that is that we're doing to create memories for our children. We don't have to choose between funding our kids' private school or funding our retirement. No, you don't have to choose between that anymore. Listen, folks. You can do all sorts of things with the money that you're making now when we show you how to pay 75% less interest, still pay off your loans in record time, and save money and become your own family bank. All at the same time with the same resources. You don't need more resources. You just need to pay less interest so that you can invest that money into your family. We're going to be talking about that today. And I listen, I can't wait to get into that. Jared, let's go. Let's get started, man. Let's get started.
All right. So we're going to go through some quick moderated introductions, and we're getting into the first example. So please raise your hand, come on stage, utilize the chat feature. And let's get this show rock and rolling. So my name is Jared Alberton. I've been in tech since 2006. My passion is to increase diversity in tech. So I do a lot of spaces on Clubhouse and Twitter around breaking into tech. Also do rooms around the metaverse, NFTs, and crypto. If you're interested in that type of content, hit up my 10K card, jared10k.com. And you can find me on Instagram, Twitter, and Clubhouse, and LinkedIn. Up next, we're going to pass the mic to YCEO.
Good morning. Good morning. I'm Tiffany, the Y CEO. I hail from Cincinnati, Ohio. And here in Ohio, I changed the law at the Supreme Court level for borrowers. And I'm really excited about the opportunity I have to serve you here on Clubhouse by teaching you too how to protect your brand and your business. I'm also in the commercial property development space as a corporate compliance specialist, and I've been doing that over 20 years. I am now a funder and commercial lender as well, so I can actually produce all of the documentation you need from start to finish for your loan. That makes me uniquely qualified to assess your deal and your property and make sure you leverage it to the maximum to build your portfolio. I'm a large scale lender. In other words, I have brokered deals in the $1 billion category. That's my specialty. So I'm also a certified business executive leadership coach. And in that role, I teach you how to build your team for big, not just for today. So that is really important. And I also teach you how to scale. I'm a 3-time award-winning philanthropist, and I'm also a financial freedom advocate and community action agent. Tonight, we will be having the Alpha Kappa Alpha Showcase. I'm really excited about that. I'll be joining forces with some powerhouses on the app. My story is Lolita. And we are also especially excited about meeting one of our wonderful stars. And I won't throw her name out there because we are on a recorded platform, but let's just say she has done some amazing television shows. So I'm really, really excited about that. And you will see me as the DJ in one of the features tonight at 7 p.m. Eastern Standard Time on Clubhouse. You can click my bio to find out that link, as well as to connect with me at yceo.club or yceo10k.com. Thank you. Back to you.
All right, we're going to keep on just passing it down the line.
Good morning. This is great Motivational Monday. This is a great way to kickstart your week by being
Motivational Monday.
How to pay off your bills, your mortgage, your debt. My name is Valerie Sears Jones, and I am in the great state of Texas. I am a licensed realtor, soon to be broker. And we love helping buyers fire their landlord and become the lord of their own land. We work with many sellers and investors so they can liquidate assets and acquire many others. And this room is exactly where you need to be so that if you have debt, we can figure out how to eliminate that debt quicker. If you need to reach me, you can reach me at valley10k.com.
All right, 10K, are you in the building? He's working with his children this morning. Oh, did he flash his mic?
Hey, he's not working with his children. You have the joy of getting his kids ready to school.
Oh, that's what I meant. That's what I meant.
I'll come back to my intro after that, brother. Back to you.
That's what I meant.
Awesome. Credit Goddess, you're up next.
Grand Rising, everyone. Happy Monday. My name is Rose Laura Lewis, also known as Credit Goddess. I am all things credit and the official credit expert for the P.I.L.L method family. I am a credit score improvement strategist, business credit consultant, and an educator at BRRRR University. If any of you guys have any questions in regarding to credit, although we're talking about mortgage, I know many of you guys are wondering, should I buy this home? The interest rates are going up. If that is one of your concerns and one of your worries, do come up on stage. Don will actually show you how, paying higher interest allows you to pay or save more money than someone that has a lower interest. If that is mind-blowing, what I just said, come up on stage, ask that question, so that way he can show you how that is done. But thank you guys so much for being here. Go ahead and share this to your friends and family. Let them know about this opportunity, because this is the beginning of generational wealth by sharing this information as well. That's a wealth mindset. But thank you guys so much for being here. We'll see you soon.
Credit Goddess, did you actually say that as interest rates rise, that can be that the home buyers will be better off? Did you just say that?
Yes, home buyers will be better off with higher interest rate than those with the lower.
Oh man, if you're not coming up to ask how that happens. All right. Let's keep going. Kurt.
Good morning, everybody. Always good to be here in the P.I.L.L Method Club, in the P.I.L.L Method room, where Don is going to tell us exactly what we need to do. Excited about what we're going to get into today. One of the things I get to do for you is to serve as your producer, to make sure that the video of Don is going out to Facebook, YouTube, LinkedIn, Twitter. For those that are watching right now, we want to say a word of welcome to you and encourage you to drop your questions in. If you are inspired, if something you've heard already, even from the moderators' introductions, have already inspired you to ask a question, go ahead and put it in the chat. We will make sure your questions are answered. I believe in the power of video, so much so that as I was scrolling around on Instagram yesterday, I came across an account. I think it said 10K. I think it said 10K on that account. And on that account, there was a guy named Shake. And so I said to my wife, do you know who this guy is? And let me tell you something, 10K, you got me in a lot of trouble yesterday, brother. So that video with Shake from Love is Blind, man, that video caused a lot of contention in the household, man. But this is the power of video. When people see a video, they respond to it in a way that it comes from the gut. It is a experience that happens, and this is why I love the power of video. I love what Don is doing with video, and if you stick around, you're going to see what exactly I'm talking about. If you're in the Clubhouse room, I want to encourage you, come on over, pick up your tablet or your laptop, come on over to ICE10K videos, plural, .com, and hit the subscribe button while you're there, and click on the video that says live, and you'll see Don and I on screen, and we'll be able to take your questions there as well. All right, I pass the mic over to Flame.
Good morning, 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 good morning. What's happening? Oh man, I'm so excited this morning, man. Up here with Jared, and hey, when you talking about Don, man, he brings so much into the game. Listen, when you see the energy of the room title, listen to the title. Pay off a mortgage in 7 years. See, he didn't say 17. He didn't say 70. He said 7. Man, listen, if that ain't enough to get you woke this morning, I don't know what is. By the way, man, my name is Flame Newton. I come from the space of credit, anything, all things pertaining to credit, business, personal, regardless of what it is. If you're trying to get your pet some credit, I'm here for that too. Right? Other than that, man, listen, man, I come from that different space. That space is that I don't have any degree from Harvard, Yale, or Brown pertaining to credit. I don't. So if you're looking for that guy, I'm not him. Nor do I have a storyline of where I had bad credit and I had to fix my credit up in order for you to talk about credit. Nope, don't got that neither. I come from the opposite end of space, known as one of the most despicable human beings that God has ever created. That's right. Why was that? Because I actually killed people and I actually robbed them while they were still alive. Yeah, you heard it right. You heard it first. I did, which landed me in state and federal prison. That thing is called identity theft, right? Got to prison, understood that a lot of people there wanted to learn about credit because they didn't know anything about the monetary system. And as I was teaching them, I came up with this idea. It's like, man, they didn't teach me credit in school. So voila, I'll create my own school. It's called the School of Credit, where each grade level teaches you something different pertaining to credit. I got out and got on stages. In the year of 2021, I did 65 speaking engagements, 48 paid. And other than that, man, I'm here to serve. I'm serving. I'm here to serve you guys in any capacity that I can. Now, other than that, man, I'll pass this thing over to Kelly. I'm out.
Wow, Flame. You know, folks, listen, he's he's turned up today. Flame, I hope you have something to talk to us about later on in the show, because man, I had an opportunity to work with you in person. I got to see this man do his thing live in Tuscaloosa, Alabama. So folks, we're going to be we have the pleasure of having him on the stage. And Miss Kelly, listen, we need to talk later because I have an event coming up and we're going to need your services. Miss Kelly, come on up.
I can't go after Flame. Come back later.
Well, listen, that's why I went in between.
I appreciate that. That softened up just a little bit. Well, good morning, everybody. I'm Kelly Russell. I'm the owner of Self-Care Holistic Retail, location based in Wilmington, Delaware, and I've been in the e-commerce space selling for over 15 years. Lifetime entrepreneur, and I am in this room because I need to know how to not get scared off by these high interest rates and learn how to pay this stuff off fast for me and my clients and my family. So thank you for holding this unique space that we all need to be in, and share this room in the hallway. So many people think it's just about mortgages. It's about anything with the interest rate. So that was my ignorance when I first met Don. I'm like, I don't need to learn that part, but it was so many other things. So thank you for holding this space, and I'm here as a student and add value where I can.
Wow, wow,
All
wow.
right, perfect. So I think I see one hand raised, but well, I see the notification, but I don't see whose hand is raised. Um, So, Don, go ahead and throw an example up there and let's get into the content. But make sure to raise your hand, come on stage. Also, thank you to the 9 people that have shared the room. If you want to share the room, you just click where that says number 9 right now. It's a little share icon. Then click the top icon that says share on Clubhouse. And then you can either just share or you can, add some emojis or a comment. So I just went ahead and did that. Now you see the 9 turn to 10. So 52 people in here. Would love for all of you to share this room into the hallway. Also, you can click that button and click the invite people option as well and invite people into the room. All right, so Don, let's go ahead and jump into it. If you want to see these examples live on your screen, go to your laptop or iPad and go to ice10kvideos.com and then choose the live option and you'll be able to see what we're about to walk through live on your screen. So Don, I'm gonna pass the mic to you.
All right. Thank you very much, Jared. Listen, I'm so glad that we're in here this morning. And I'm starting out with something
Hey, Don.
yes, sir.
I hate to. I just want to give a quick shout out. She's in this space as well. India
Come on.
Delgado is in the
Who?
in the room right now. India Delgado. India
Okay.
Delgado is in the room right now, and she is a good friend of mine from the live streaming community. But she is in this space. She does trainings and a number of things with credit and home ownership, first time home buyers for minorities. And I'm excited to see her here. Just wanted to give her a quick shout out. India Delgado.
Oh, no. We just can't do a shout out. We can't we got to invite her up. Okay. And we also have Sister Marina in the house. She's trying to hide out down there. You can't, Marina, you know better. Come on now. Don't be trying to hide your light under a bushel. Get on up here and get moderated.
That's the last name, Marina.
Try to hide her light under the
She's
bushel.
powerful.
Come on, get on up here. Somebody invite her up. So listen, folks, we got some power up in here. And so listen, before we even get started, can we do a proper introduction, Kurt? And
Absolutely. India, I see you came up, so go ahead and unmute real quick and just tell the folks a little bit about who you are. Excited to see you here today.
Good morning. I was definitely trying to lurk, and I knew Kurt was going to call me out. I am watching on YouTube as well because I come from a very similar space with him where we live stream together. So I feel like I wear 2 different hats, and Kurt called me out on here because of why I even came to the room. So I do mortgages. I am a mortgage loan originator in New Jersey. I work for a small community-based bank where we can cover the tri-state area. But for me specifically, as a minority, a woman of color, I am a lesbian. So I check a lot of minority boxes. I focus on specializing the process for first-time home buyers. And so a few of us have already said that the lack of knowledge that we have as minorities in terms of finances, of credit, and things like that really hit home for me. And I changed my career. I used to be a bank manager. I moved over to being a loan officer. And I work with local nonprofit agencies to connect low to moderate buyers to the dream of home ownership. I teach financial literacy courses where I teach the first time home buyer process and I simplify it for us, right? Because it's different when you're hearing it from someone that looks like you and understands your struggle versus someone who doesn't look like you and really, right? Like that's all I'm going to say without bringing too much political drama into it. But it's funny. What brought me to the room was that I saw the title, and with being a banker, and one of the speakers also said it, was the banks don't want you to know that. And I work for a bank and I have yet to learn this method. I said, hold up, I need to be a part of this. And a big part of it, it's the same thing with like PMI, right? The banks want you to pay fees. And for me, with what I do as a financial literacy instructor, at least with my knowledge, I show people how to get around that. So it's really important for me to be a part of this room, because if I can teach my clients the same way how to pay lower interest rates, how to get out of PMI, how to take advantage of down payment assistance, adding now paying off your loan in 7 to 10 years is going to add to my bag of goodies on how I can help our communities. So thanks for the opportunity and thanks for calling me out, Kirk. I appreciate you.
I'm not going to stay on this long, but she is also a live streamer. She's been on my show. We've done a couple of collab projects together, and she's a beast in that space. And she's using those skills to make her trainings much more engaging and allow for those who are taking her classes and courses and trainings to really have that information driven home even deeper. So just wanted to shout out that part as well. Thank you so much, sis, for coming up.
Miss India, thank you so much for coming up. Kurt, are we ready to get started here?
Absolutely, sir.
All right,
we
folks.
got your this is Refi Fantasy on the screen.
Refi Fantasy on the screen, folks. Listen, what we're going to be talking about this morning is looking at loans and looking at products the way that we should look at them. And here's the thing. If you're saving money by refinancing, who has to be losing it? Because if you're saving money, somebody has to lose it. So why, let me put it this way. Do you know, I actually know people who their own bank or their own mortgage company has reached out to them, having them locked into a higher interest rate. And that bank is reaching out to their own customers saying, oh, you could save money by refinancing. Now, Kurt, I know you've been in business, and there are a lot of business people here that are on this stage. There are people who are in business on this stage. Can you imagine going back to your customers that you sold something to 5 years ago and saying, you know what? We overcharged you 5 years ago. Here's some of this money back. What would you think of that?
I would be thankful for the money, but otherwise I'd be upset.
Can you imagine doing that yourself, Kurt? One of your clients saying,
can't imagine.
Listen, we charged you something 5 years ago. We really truly believe that we should be charging you that. But listen, we want to give you some of that money back that you gave us 5 years ago. Huh? Listen, nobody ever asks that if their own bank is asking them to refinance, locking them into a higher interest rate. Now we say, listen, we want to offer you a lower interest rate. Ask the question, what's in it for you, bank or mortgage company? Let's talk about that. I'll show you just a couple of things here. We're going to Refi Fantasy. So we have a $200,000 loan on the screen at 6%. Now we're looking at being offered a 3% loan. Okay. And we're going to roll in the closing costs. Okay. So here's what we're going to do. We're going to take a look at this. And most people say, if I got 3%, if I got 6% and they're offering me 3%, my monthly payment is $11.99.10. But do you realize that most people refinance after 5 to 7 years? Mm-hmm. In fact, every 5 to 7 years. Americans don't have 30-year loans, folks. We have a string of 5 to 7 year loans until we die. Think about it. In fact, can I tell you a little story? How this goes? All right. So we've got a couple. They meet and they get married. Oh, they just love each other, and so they have a child, and then they go out and they buy. They're buying their first home. They move from their apartment to their first home, and they like the house and everything about it. But once they have another one on the way, mm-hmm. That's about 3 to 5 years in. They realize that this house is going to be too small. So they get a brand new mortgage at about 5 years in. Okay. A brand new 30-year mortgage. Okay. So they had a 30-year mortgage. Now they got a brand new 30-year mortgage after 5 years. So that makes it 35 years now to pay this thing off. So now that they've got this nicer house, guess what happens 5 to 7 years later? 5 to 7 years later, the interest rates drop and the mailboxes get stuffed full with offers, and the telephone calls keep coming. Refinance, refinance, refinance. And then they refinance 5 to 7 years later.
Oh, yeah.
Yeah. Okay. So now they've been in this thing, 10, 12 years. And now they're looking at, wow, little Johnny, little Mary, they're getting close to, and another 5 to 7 years. Little Johnny, little Mary getting close to graduating from high school. And you know what? We just didn't get around to saving enough money for college. So another 5 to 7 years happens. And guess what, folks? They refinance and get a brand new 30-year mortgage to cash out so to help little Johnny and Susie get ready for college.
Mm-hmm.
Oh, man. And then what happens? 5 to 7 years later, Johnny and Susie, they graduate from college, move out of the house. Now mom and dad are kicking around this big old house all by themselves. And what do? They downsize and get a brand new 30-year mortgage.
My God.
At age 55 or 60. That's the story. So let's take a look at this and see what we can do about it. What if you refinance after 7 years, folks? Take a look at this mortgage at 6%. Okay. And there are 6% mortgages out there. You know how I know? Because if you are a real estate investor, you're used to these interest rates as a real estate investor. Look at this. After 12 months, how much interest have we paid after 12 months on this loan? We paid it down by 2456.01. But if you take a look at the fourth column, that's cumulative interest, 11,933. That's the interest paid in the first 12 months. The interest paid in the first 24 months, $23,714.90. Wow. Now we're going to jump all the way to year 7. $80,000 in interest paid, principal paid down $20,721. Folks, that's $100,000 all day paid out. But this home person is buying this home. They've realized $20,000 in potential equity out of $100,000. Now they're going to refinance after paying 80 grand in interest. So they're paid down to $179,278.87. And now they're going to refinance to get this lower interest rate. And their closing fee is $5,000. Now, this is a sale, folks. This $5,000 is a sale because the average refinance right now, and we got somebody on the stage that can call me out if I say something wrong. The average refinance is around $8,000 to $10,000 right now.
Wow.
Okay. So they refinance, excuse me, and they're going to add $5,000 to this. And now their new principal is $184,278.87 and 3% over 30 years. And their new monthly payment is $776.93. Let's stop right here. Put a pin in it. The major factor in lowering their payment is not the new interest rate. The major factor, now it is a factor, okay? Don't get me wrong. The new interest rate is a factor, but it's not the major factor. You know what the major factor is? It's taking that $184,000 and dividing it over a new 360 payments. That's what lowers the payment. That's the major factor right there. A brand new 30-year mortgage. So now we have $776.93 is our new payment. Now we're going to do a little bit of math. Now our total interest paid on this loan over 30 years is still $95,415.93. Now let me ask you, is $95,415 3% of $184,278?
No, it is not.
No, it is not. Because the total repaid is going to be $279,000. And you know, thanks to the Obama administration, because in October 2015, you have to start getting this information 3 days before your loan closes. You're not only getting your interest rate, but you get this sentence right here: total interest paid as a percentage of principal, 51.778%. Yeah, 51% of what you borrowed becomes interest. And once that number, people became aware of that number, my phone since 2015 has not stopped ringing. Okay, people are beginning to realize this now. So now our old payment is of $1199.10. Our new payment is $776.93. That gives us a savings of $422.17. And folks, this is how this thing is sold. And you know, listen, Flame is in the room, and I get turned up just like him, because when he shows up, I just get his enthusiasm just permeates the internet. Okay, I can't say the room. I've said the entire internet. Okay, so what we're talking about here, folks, is this is how it's sold. If you have $5,000 in fees, take the savings, divide that into the fees. That tells you how long you have to be in this mortgage, this new mortgage, to recover the cost of the fees. Divide the 422.17 into the 5,000. That will tell you how long you have to stay in this mortgage to recover your costs. Exactly the wrong way to do it. Here's what you should be looking at, okay? That $5,000 that you just rolled into the mortgage at 3%, we are now going to pay that back. Okay, we're going to pay that back now. All right. So we're going to, after 4 months on this mortgage, we're now paying back the $5,000 in fees, because we have to pay that back to get down to our original $178,000. Does that make sense? Well, it should. So now in 4 months, Kurt, we paid this thing down by cumulative principal, $1,269.68. That, my friends, is our attempt to pay back the fees. How much interest have we paid on the fee rolled into this loan already, Kurt?
$1,838.04.
Oh my gosh. After 7 months, we're still paying off the fees. We're down to $2,230.31. How much interest have we paid so far on the fees?
$3,208.20.
Oh man, now we're 10 months in, Kurt. 10 months in, we paid it down by $3,189. How much have we paid interest on the fees right now?
We're at $4,500, man. $44,571.18. This is crazy.
Oh man. So now, listen. Let's end this. Okay, it's going to take us 16 months, Kurt. 16 months to pay back the $5,000 in fees, or I call it how not to pay your mortgage for 16 months and still keep your house. Because all we're doing is paying back the fees. 16 months, $5,155.72 in cumulative principal, and how much in interest?
$7,275.16.
Total cost of this refinance after 16 months?
$12,430.88.
There you are, folks. That's it. So we went over this the other day, Kurt. So if you borrowed $1 from me and I said, pay me back $1 in interest, I need you pay me back $2 tomorrow. What interest rate am I asking for?
100%.
Do you want to borrow money from me?
I would never borrow money from you.
I would love for you to. So folks, if I borrow $5,000, Kurt, and I pay back $5,000 in interest, what interest rate is that?
Still 100%.
100%. But if I pay back $7,000 on a $5,000 loan, that's closer to 120%.
120, my God.
And this is a person with perfect credit, folks. Perfect credit paying 120% interest is common in this scenario because we're not looking at the interest cost on these loans. We're only looking at the interest rate. Okay, can you see that? Can you see what's going on now? So listen, this is what we're doing here. So I'm going to move in now to down payment deception as you keep this in mind. Down payment deception. Never, ever, 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 ever pay a large down payment on a house or a car. Now, some loans you have to have something as a down payment. Okay, I mean that's just the rules of the game. But some people they've got resources and they want to put even more down. And so I had a neighbor, he's already moved, here in Huntsville, Alabama's building a $400,000 home just a few years ago, $400,000. And here's what he asked me: should he put $100,000 down so he could finance 300,000 instead of 400,000 at 3% over 30 years? Okay, that's the answer. That's the question. Here's the answer he received. I told him that, if you want the $400,000 loan at 3%, that's the way to go. I mean, if those are your choices, take the 400,000, not the 300,000. So he goes, he's an engineer. All right. So he goes to break it down for me and said, Don, listen, I need you to break this down for me because I already did the comparison. On the left side, we have 400,000. On the right side, we have a $300,000 loan. On the regular payment, the principal and interest payment on the $400,000 loan at 3% is $1,686.42. Don, my payment over here is $1,264.81. Now, the total interest cost over 30 years, Don, on my $400,000 loan would be $207,111.20. And my total interest paid is $155,311.60. Listen, folks, we're getting close. We're getting close to showing you what really happened here. And if you're new to the room, you want to see this. Moderators, how can our new people who just got to the room, how can they see this example on their screens?
Yeah, so if you go to your laptop, your iPad, or your desktop, type in ice10kvideos.com. You'll get taken straight to the YouTube channel. Choose the panel that has the red dot that says live, and you will be able to see these examples live on your screen. If you want to see these instructions written out, you can go to the chat section in the lower left-hand corner. It's the first message that I wrote. All right, back to you, Don.
Wow. Ice10kvideos.com to see what we're talking about here. So here's what we're talking about, folks. Keep in mind, when you are trying to make a decision on which loan or how to configure your loan, it's all based on these words: your term, 30 years, your term of 30 years, or 15 years, or 25 years, whatever your term is. Those are the terms in which your choices are couched in those terms. So we've got we're comparing two 30-year mortgages. But if you read the title to the room, it is How to Pay Off Mortgages in 7 Years. Mm-hmm. So if we can actually pay off a loan in 7 years, then these numbers that are applying to these 30-year loans don't apply to anyone who wants to pay their loan off in 7 to 9 years. Only those who intend to stay in their loan for the full 30 years. That's where these numbers apply. So keep that in mind. Is that how you want to figure this thing out? Oh, yeah. I'm comparing one 30-year loan against another 30-year loan. Oh, no, we don't want to do that. So here's what we're taking a look at, folks. And here's the total prepaid. All right, total prepaid is $607,111 over $455,331. But look, total interest paid as a percentage of principal on both loans is the same. 51.778, 51.777. Ooh, the ROI for the bank is the same. on both loans. All 30-year loans at 3% are 51%. That right there should tell you something. Now watch this. The difference in interest paid between the two loans, the $400,000 mortgage and the $300,000 mortgage, is this: $207,111. This is what he's pointing out to me. He says, Don, take a look at this. I'm going to save $51,779.60 over what? What term? A 30-year term. I'm going to save $51,000 over the 30 years. Now, when you get a mortgage, do you really want to keep it for 30 years? Come on. We need a new mindset. We need a new spiritual mindset. Okay? And we're going to be talking about that in just a little bit, because P.I.L.L Method is going to be presenting a seminar in Nashville, Tennessee. P.I.L.L Method Seminars presents spiritual money mindset in May, and you want to be there. So we're talking about a new mindset here, folks. All right. So $51,779.60, that's what he's saving. But here's what I need to show you. Watch this. For all of you that are new to this, here is the payment that we're looking at. The $400,000. It's $1,686.42. That is the payment. Now I need you to focus on this clearly. If we start this payment in January, we start this mortgage in January, take a look at this. On payment number one, $686.42 goes to principal. We subtract that from the $400,000 in principal that we owe. We're left with $399,313.58, which means $1,000 went to interest. So in month 2, that would be February, we can actually see February's principal payment even before February rolls around. That would be $688.14. So here's my question to you folks. If we make this payment in January and we can see the amortization schedule, and we know that February's principal payment is $688.14 when February rolls around, do we have to wait till February, Kurt, to give the bank the $688.14 if we wanted to?
Nope.
Could we give it to them in January if we wanted to?
We could, absolutely could, yes.
If we had it, okay?
That's correct.
So now, okay. So if we had it, we could give it to them in January. And because of the rules that say that all of your prepayment will be deducted from the principal that you owe, all of your prepayment goes to principal. None goes to interest if you direct the bank to put it towards principal. All $688.14 will go to principal if we gave it to the bank early. We would be paid down to line 2 in January, $398,625.44. We'd be paid down to here. Then the bank takes a look at this month in balance and then figures out how much interest we owe on the very next line. So our next payment for February, if we paid that early, is now line 3 on the amortization schedule. The payment for March actually moves up one. Guess what, folks? That $688.14 eliminated payment number 2. Payment number 1 is now touching payment number 3. We're going to pay $689.86 in principal, $996.56 in interest. And guess what happened to the $989 in interest on line 2?
What happened?
It got canceled. You never have to pay that. Just by giving the 688. Listen, folks, you already owe the 688.14. You could choose to give it to the bank early and not pay the 998.28. You can skip over that and not pay that. Your total interest cost on this loan has just been reduced by $988.28. Wow. What if you paid in January? What if you paid the regular payment in January and then looking at your principal, payments here on the amortization schedule. What if you decide to give the bank the principal payment on line 2, 3, and 4, the 688, the 689, and the 691.58? What if you decided you wanted to do that as well? What if you had a little resources in the bank? Do you realize your next mortgage payment for February would be on line 5, and you skip the interest payments on line 2, 3, and 4? Round it up. That's about how much money?
That's about $3,000.
Ah, but now, folks, if he has this mortgage, okay, if he has this mortgage, remember, he had $100,000 he wanted to pay down, okay, but he still has the $100,000 in the bank. What could he do with his $100,000 now that he has in the bank that he didn't use as a down payment? Could he use it as a prepayment to principal now?
Yeah.
He could, Kurt?
Yes, he could. I mean, there's nothing stopping him.
Is that legal?
If you can pay 688, why not 100,000?
Oh my goodness. If we look at the cumulative principal on this thing, and we put $100,000 on, that takes us down to line 125 on this schedule. Our new February payment is on line 126. How much interest have we saved already? Let's take a look at this thing. Let's do the math. So listen, we apply $100,000 instead of a down payment to your $400,000 loan. We put it down as a prepayment, and we save $110,000 in interest right now. He was satisfied for $57,000 over 30 years. Now he's going to save $110,000 he never has to pay. He did it all in 1 month.
Wow.
What? So
it's a fantasy for sure.
In interest, and he eliminates how much? He eliminates 10 years, 3 months off his loan. Now, see, here's what's happening, folks.
Oh, wow. 10 years. Wow.
If he had put $100,000 as a down payment, he would have started out with a $300,000 mortgage for 30 years. Starting out with a $400,000 mortgage and then using his $100,000 as a prepayment. He now knocks 10 years and 3 months off, and now he starts out having a mortgage for 19 years, 9 months using the same $100,000. Listen, folks, if you're not excited about this information, Flame, are you still in the building?
Man, I'm sitting up here. I just shared the room out. They tripping. If y'all ain't got no love for Mr. Don, what he's just talking about right now, it's unbelievable. I mean, it's the same exact money by applying it into two different places, as opposed to you're applying it at the beginning, right? Which they so happily come into the suit and tie and ready to take your money, but you're still at the 30 years. By you actually taking $100,000 and putting it in the prepayment and call, now you save yourself 11 years on the mortgage, and you can't give no love for Mr. Don, the bill method for that. Come on, man.
Come on. Oh my goodness.
Come on, man. Come on. This is what we're talking about. So he's got 19 years, 9 months left. So now, what is he doing now? So what we're going to do is now plug all of his finances into our artificially intelligent computing system. It is cloud-based, all right? AI, artificially intelligent computing system that does all of the math, that's going to tell him exactly how much money to pay, what month to pay it in, what day of the month to pay it on, and we're going to compute his interest savings from now on. And by doing that, he became a P.I.L. method client. He will pay off the rest of his loan in just 7 years. And what is the grand total in interest that he's going to pay? Because we can calculate that even before he starts. His total interest cost on this loan now is $30,000 for the entire loan. Come on, can we get some more of this?
Wow. Wow.
And folks, guess what? The guy that hardly ever talked to me when he lived across the street from me. You got that right, folks. I'm his new bet.
Oh yeah, you saved him over $50-something thousand. What, 23 years on his mortgage? Yeah, you'd be my best friend too.
Come on, man. Jared. Listen, man. Listen, I need to take a break and drink some water or something. What we got as a filler?
My goodness.
Give you a little filler. So if you've never been in this room before, make sure to click that greenhouse at the top. Make sure you follow in this club, and then also make sure you follow Don. Click that bell and click that always on notification option so that anytime he's on a stage talking about the P.I.L.L method in a stage with real estate professionals, finance professionals, you will be alerted. You always curate about who you follow. So also check out all these moderators: YCO, Valley, 10K Cards, Credit Goddess, Kirk, my man Flame, Kelly, Coffee, and Olivia. Olivia's at 19,900. We got 73 in here. Let's go ahead and give her a follow. Let's get it to 20K.
Okay.
Come on, let's get her over the line.
Listen, would it count? Because I'm already following her. Would it count if I unfollow her and follow her back? No, that won't count. No. Okay. All right. So I'm trying to do a little P.I.L.L method math here.
I was thinking the same thing, Jared. He over there, he's still trying to use the P.I.L.L method on followers. If I take that back and add this, that would jump up your followers by 4,300.
Have mercy. Oh, wow. Listen, I just get so excited about this thing, folks. Listen, if you want to know more about the P.I.L.L method, here's what you're going to do, because Jared is going to make me say it anyway.
Might as well. Yeah.
You might as well do it right now. So listen here, folks. Two things. Here's what you want to do is go to ice10klive.com. All right. Ice 10K Live. That stands for Interest Cancellation Expert, by the way. Go there, and then you'll find the button that says Get a Savings and Earnings Report. Go ahead, click on that button that says that, and then you'll be taken to a screen on our website. Read all the instructions, and then put in your cell phone number and click confirm. Wait for the code to come as in a message to your phone. Wait for the code. Don't click the button again. Wait for the code. When you get the code, now put that in the space provided on the website and click confirm again. And then what you'll get is we'll let you into our financial form. Fill out the form with all of your loans. I mean, the more loans, the better. Okay, don't leave anything out. All right. When you put all of that in, then our staff will take a hold of that and calculate for you the month, day, and year you're going to be debt free, and how much interest you're going to be able to save. And they'll get you an appointment, a consultation, and then we'll be able to talk together and figure out what are going to be our next steps. But folks, that interest saved, we're going to also talk to you about how you can become your own bank by saving that interest. Now, I know some of you were wondering. We have a banker on the stage, and you want to know what she was thinking about this. We're going to ask her right after I talk about the book that's containing a lot of this information. All right. We have a book. All right. We have a book, and that book is the P.I.L.L method, a better way to eliminate debt. And in that book, folks, we have put some of this information in. So there's 33 million titles on Amazon. And out of 33 million titles, there's only one book, that talks about how to read an amortization schedule and how to defeat it. One book. And that's this one. You can search far and wide. And if you find another one, let me know. I would love to be able to read that one too. But we've searched far and wide, and this is the only one that does that. That talks about, who else talks about how you can use the same money as a prepayment as a down payment and now use it as a prepayment and knock years off your mortgage using the same money. It's only one book that talks about that. Listen, we're going to be talking about some other things here in just a few minutes. But folks, we want you to know that you want to get this book today. And if you get this book today, that's not all you're going to get. The very card that you clicked on, you will be able to get a card like mine, a 10K card, a digital business card. I'm telling you, all of your stuff in one place. Sean, 10K Lashley, are you in the building to tell them why this is so important?
Did you say a 10K card, Don? Did you say the #1 digital business card on the planet?
I sure did.
I just want to make sure that's what I heard.
Come on, man.
So guys, basically, the same way Don has been using his 10K card to navigate the instructions throughout the room and sharing where to find everything regarding his business, you can be doing the absolute same thing as well. And what Don has done was Don prepared for a bunch of cards. So everyone to get a copy of his book will actually get a digital business card already paid for by the P.I.L.L method. So if you're out there, if you're in business, if you're looking to get more customers and get more leads, you want to put everything in one place. Have the customers overlook exactly who you are. Let them cross-reference your website. Have them cross-reference your social media account. And then they make a decision that, hey, you're the person I want to do business with. So get the 710K card, guys. And for the P.I.L.L method room, it's super simple. All you have to do is to get a copy of Don's book. Once you're finished getting a copy of Don's book, fill out the savings and earnings report. Very, very crucial. Because his goal and the goal of this room is to help you to achieve financial freedom. After you've finished filling that out, then all you have to do is to get your prepaid digital card. And again, there's no cost for the basic card. Don already covered that cost for you. So if you're in the audience or you're on stage, guys, pull the trigger. Do something great for yourself today. You deserve it. With that said, Don, back to you.
Thank you, thank you, thank you. So, Miss India Delgado, if you're still in the house, I've got 2 questions for you. If you don't mind, how long have you been in the banking space, and what do you think of the information that we provided this morning?
Man, I messaged you guys on YouTube. I was like at the edge of my seat listening to all of the information. And it's funny because when I did my introduction, I said that I wasn't aware of the P.I.L.L method. And what you helped me with was that I actually teach this to my customers one-on-one. I just didn't know what it was called. So it's so funny. And I'm glad, right? Because that's what you're here for, to help us grow. So I've been in the banking industry for over 10 years. I've been a loan officer for 4 years. So I'm still learning and understanding the process. And the biggest thing for me is, like I've said before, is really helping us minorities, people of color, people who, we are started off not with wealth. And that's what our goal is, to build generational wealth. That is near and dear to my heart. So listening to everything you said, I wanted to jump in at every single time and just give like praises, literally, like I said, at the edge of my seat. So the first thing, and you guys, man, I don't know, you opened up the floor to me and I'm all rampant. The first thing that you said, right, is about term. And I educate my clients on this. So you can do a refinance and that's all fine and dandy. And here's the thing, I get paid on commission. So the higher the loan is, the more I get paid, right? So it's technically in my better benefit to get a higher loan from the client, but that's not where my morals are. My morals are to help us and where we are at, because at the end of the day, God is going to bless me. So when you talked about changing your thought process with spirituality, that's why I'm like, you hit all the points for me, right? So, okay. So going back to the term, comparing a 30-year to a 30-year mortgage. If I'm talking to a client who's looking to refinance, I tell them, all right, so we're going to save your interest rate, but that's not the only goal. The goal is to, can you take this monthly savings? Because naturally, that's all people say. People be like on a monthly basis, oh, I'm going to save $500 a month. And that's all great. But can we take that same amount of $500 savings, and instead of putting you back in another 30-year loan, can we put you in a 15-year term, right? Because if we can save those monthly $500 and keep your monthly mortgage the same, but cut the term, now you're cutting the interest rate in half, right? So educating the clients and telling them to ask questions, because a lot of the clients don't ask the right questions. Or in retrospect, I tell them that same monthly savings, if we're going to use a $500 payment, for instance, that they're saving every single month, you need to put that back into your mortgage, right? I tell my clients, do not look at that like unless you really need it. But we're talking about paying the mortgage off on a 7-year term. These people are highly motivated. So you guys are saving this $500. You want to put that back into your mortgage. So that goes into the other point that you talked about, the prepayment. So I'm a banker, and not all bankers are bad, right? So don't hate me. I'm a good banker. I come with a good heart. But the banks, they're in this to make a business. So when you talked about making prepayments to the mortgage, when you said, why wait for February to make that payment, pay it in January, you guys need to make sure that whether you're making that payment online or whether you're making that payment with the teller, you have to emphasize and say this additional payment goes towards principal only.
Yes.
Because if you do not,
it will go to escrow.
Will pay it towards your regular payment, and you are not going to put into effect what Don just showed you. So if you're looking, and again, this is an auto loan, a student loan payment, any type of installment loan that you're paying interest on, make sure that if you're making an additional principal payment, you must select the option. And if it's online and they don't have that option, do not make that payment. Call them and make sure that they select that. Yes. Because again, you're going to reset. So that's imperative, right? And then again, with the closing costs, when you were talking about, a lot of people don't consider that with the closing costs, the banks, and those fees are not just bank fees, there's title fees, there's different things, but those are fees that you can roll into the loan. So a lot of time loan officers are like, you don't need any money to make this refi, we can add it into the loan. The other thing that you said was paying down the first $5,000 in month, let's say 1, 2, 3, and 4. So here's the thing: when you're refinancing, chances are your escrows, your homeowner's insurance, and your taxes are in an escrow account with your current bank. If I'm going to refinance for you, I'm going to start a new escrow account. So what's going to happen is I'm going to start a new escrow account. I'm going to collect those closing costs. Once the new bank, pays off your old bank will be sending you a check for, most likely 95%. They will be sending you a check for those escrows. So when Don talked about paying down the $5,000, that's what I educate my clients on. I tell them that is not extra cash for you to go out and celebrate. You don't go do this, go that. That extra cash that you are getting from your old bank, your original bank, you should be making a prepayment to your mortgage to take those escrows and put it back into the loan. Why would you want to refinance closing costs? Those pay yourself back, right?
Come on, girl.
So listen, like I said, you got me all riled up. I can talk about this stuff forever, and it's really important to educate our clients. And this is what I do from a financial literacy perspective, because we're not educating each other, we're not helping each other out, and we're going to stay in the same rut over and over again.
Wow,
So I just gave a lot of information. I'm going to stay quiet for a little bit. If you guys have any questions or maybe want me to delve a little bit more with some of the stuff that I said. Oh, wait. One more. I lied. One more thing.
Come on.
One more thing. So when we talked about down payment, that's another thing that I love to talk about. So again, I specialize with first-time home buyers, right? And you guys know that as a first-time home buyer, it's very hard. It's not the normal to obtain that 20% down. It's easier for us to attain the dream of home ownership with, let's say, 3 to 5% down versus the full 20%, right? Because the goal is to get into the home the very first time. So sometimes I will have clients that say, okay, so let's just take some numbers. If they're buying a $100,000 house, 3% of $100,000 is $3,000. That's your minimum down payment. You may have an additional, let's say, 10 grand to use towards this down payment. So a lot of clients are like, well, India, will it help me if I take that 10,000 and I put that towards your down payment? Now, remember, I'm a commission-based loan officer, and I get paid on the more the client takes, the more money I make. I tell them no every single time. And the reason why I tell them no to keep their money in their bank account every single time is because when you are usually starting off as a first-time home buyer with your very first mortgage, you are getting into a 30-year term. And when you're getting into a 30-year term, that's 360 months. So when you have 10,000, and I'm going to do the numbers, Kurt, I needed to be online with you so we can do the, I'm all for the visual representation, but I'm going to put on my phone, right? So when you have $10,000 and we divide that by the 360 months, which is a 30-year mortgage payment, you are only saving $27 a month on your mortgage.
Mercy.
What's $27 on a monthly basis? Listen, I don't care about $27. I want to keep my
Keep
10
it 10K.
grand in right. And so when I break that down to customers, when I tell them that, like, listen, $10,000 is nothing to laugh at. Technically, depending on where you're at, $10,000 is a whole nother down payment for a whole nother house. So what would you rather have? Would you rather lower your monthly mortgage payment by $27, or would you rather keep that $10,000 in your bank account so now you can move on and buy investment property number 1, 2, or 3, right? So like I said, you got me riled up. So now I'm done. Ask me questions. I'm gonna take a minute. And thank you for the opportunity to talk.
Miss India, thank you so very much. You helped so many people. Listen, we're going to take some of what you said and we're going to expand on that thing. Because see, here's the thing. If you can pay a mortgage off in 7 to 9 years, okay, in 7 to 9 years, now you'll be able to use an amortization schedule. And I'm going to put something on the screen that you can give additional information to your clients about a 15-year versus a 30-year. I'm telling you, you are hitting on all cylinders this morning. And now I listen, I thought I was excited, but I'm even more excited because a loan officer been in banking for years is now said that, didn't kick me off my own stage. Didn't say Don doesn't know what he's talking about. So we're going to take what you talked about and we're going to add a little bit more to it. I'm going to put on the screen an amortization schedule here. And let me see here. Let's go ahead and do this. And We're going to put this up. Boom. And bring this up. There we go. All right. So here we got, folks. We've got this loan here. All right. We've got for $300,000. Oh, that's too many. Okay. $300,000. Okay. And we're going to put it at 3%. Okay. And here's where we go. So if we get this thing and we got this $300,000 at 3%, 360 months. I want to show you what happens when we can actually, with the P.I.L.L method, we can actually put all of this into our system and tell you when you're going to be debt free. Mm-hmm. All right. The average client is debt free in 7 to 9 years. I'm actually going to bring something up to show you that in just a few minutes, but I want to show you something that's very, very special about 15-year mortgages versus 30-year mortgages. All right. Number one is this. And I'm sure you've actually had this conversation with your clients, India. You don't need permission to make a 30-year payment. Okay. Now, if all you know is a 15-year or a 30-year, okay, if that's all you know, you don't need a permission to do a 15-year payment, because you can see a 30-year payment is $1,264.81. This is just the principal and interest, folks. So if we change this to 180, that would be 15 years. We take out the $1,264.81, do a recalculate. Now it's $2,071.74. That is your 15-year payment. Okay. You can have a 30-year loan and still make this $2,071 payment every month. You can do that. You can make the 15-year payment if you wanted to. And if things got a little rough, you can always drop back to that original payment, 360. Okay. You can always drop back to that original payment of $1,264.81. That's just one thing. But watch this. I am going to, let's take some of these off the screen here. Boom, take that off, take that off. All right, so now I'm going to duplicate this tab. All right, so we've got 300,000 and 300,000. We got 30-year, all right? And then we've got it at 30 years. I'm going to change this one to, here's something special. This is something that people don't get to see every day. The real difference between the 30-year loan and the 15-year loan. We're going to add something to what Miss India was talking about. So if we have the choice, look at here. If we understand how prepayment works, all right, on the 30-year loan, here is our principal payments: $514 and 81 cents. The next one is $516.10. We talked about if you make your January payment, the $516.10 would be your February payment. And just like Miss India said, you have to be very specific about what's going to happen with that $516.10. Make sure it's applied to principal only. Follow the rules of the particular bank you are working with, because I'm telling you, the rules at your other bank may not be the rules at your current bank. All right. So follow the rules at your current bank on how to make prepayments. Okay. So you won't have to run into problems and then you have to make 3, 4, 5 phone calls to correct the situation. So avoid that. Find out what to do. All right. So now, if I prepay $516.10, I eliminate payment number 2 and save $748.71 in interest. But watch what happens. When I lower the term, and the same thing happens when I lower the interest rate. Okay? Here's what you need to know. If you are going to accelerate your loan, then you want to have control over what your principal payment is going to be. If you intend to make every single payment, all 360 or all 180, you want the lowest term and you want the lowest interest rate available. If you plan to accelerate the loan, pay it off early by canceling interest, then you want the right interest rate and the right term for you to help you to accelerate the loan with the finances that you have to work with. Watch this. Instead of the $516.10 coming up to eliminate one payment, watch what happens when we lower the term to 180 payments. Watch this. Look at the principal payment now. If I want to get rid of one whole payment, I now have to come up with $1,325.04 to eliminate one payment and to eliminate the $746 in interest. What? If I'm going to accelerate, I actually make it harder to pay the loan off faster when I lower the term or I lower the interest rate. Watch this again. So I'm going to go back and I'm going to pick out a number. Now, if we already know that if I prepay $516.10, I eliminate this payment and $748 in interest. Take a look at cumulative principal, Kurt, and cumulative interest here. Okay. So I've got how much in cumulative principal after 1 year?
Was that $6,263.40?
Exactly. All right. So, and it's going to cost me, if I follow the bank's way of paying this back, it's going to cost me how much in interest to pay it over 12 months?
$8,900.
So here's my next question. Do I have to give the bank this $6,263.40 over 12 monthly payments?
No.
Can I prepay this if I wanted to?
Absolutely.
Would I be paid down to line 12 in 1 month?
Yes, you would.
And would I save the interest cost between line 2 and line 12?
Yeah.
$8,178.66. Watch what happens. Watch what happens with my 6340 that I could prepay on my 15-year mortgage. Oh, I get rid of between 4 and 5 payments.
Yeah.
With the same amount of money. Folks, here's what we're talking about. We want to get to 0 payments as soon as possible. Mm-hmm. And how you set up the mortgage will facilitate how, if you're looking at a system that cancels interest, Make it easier on yourself to cancel the most amount of interest as quickly as possible, because the more interest you cancel, the faster you get out of debt. Our average client is out of debt in 7 to 9 years. Kurt, we're switching screens, so let's get out of this one.
All right, hold up. Here we go.
Okay, let me know when we're out.
We are out.
Okay, good. So we're going to take a look at, and I'll tell you when we're back in.
Oh, I can see it.
Okay, great. And let's see. We want to put this one up. Nope, not that one. Not that one. We want to put another one up. Okay.
Sure.
All right. Let me see here. Where is it?
And while he's looking that up, I just want to make sure that for those that are in the room, that if you want to watch this, we see our numbers are rising. We're at 20 right now, well, that's good.
Okay.
But if those who are in the Clubhouse room, you want to see this live, these examples live on screen, go to ice10kvideos.com and you'll see YouTube, the YouTube channel for the P.I.L.L method there. Click on the live version. But before you click on the live version, just go ahead and tap that subscribe button. But yeah, click on the live video that's there. You will see Don and the example that he was about to put on screen. Are you ready now, Don?
Yeah, I'm ready. And after I'm done with this example, I want to talk to Dr. Delane Smith and Credit Goddess about what's going on in their lives, because there's some really good information that's out there. So be ready. So here is what I'm talking about, folks. This is a single mom who was wondering after her divorce whether she could pay off to get into a mortgage and actually be able to afford it. Somebody told her about me. She contacted me and says, I'm about to get this mortgage. Is it possible for me to do this and pay off a mortgage? Because my ex-husband ran the finances for the family. We trusted him to do that. That was his thing. I didn't pay that much attention to the finances, and now I need to. And I'm going into this thing, blind and scared. How can I do this for my two kids so that they can maintain at least as close to the same quality of life that they're used to, and they don't have to suffer any loss because now mom has to do everything. So let's take a look at this. So we showed her how we can, number one, she can use her current budget that she has now, manage this mortgage, still save money, and still make sure that the kids make it to their soccer or their baseball or their ballet or whatever it is that they're engaged in. She can still make sure all of that happens and pay for our home. So here's what we told her. According to the mortgage that you have, which is a total of $156,500 at 4%, brand new, this is what you would do on your own based on what everybody else is doing in your neighborhood. After 5 years, you would pay this mortgage down by $14,949.52. It would cost you $29,879.48 in interest to do that, or a total paid out, Mrs. Client, of $44,829 just to get $14,949 in benefits. Is that how you want to spend your money? She said no. Okay, so here's what we just told her. So after over 360 months, here's how much interest the bank wants you to pay on this loan, and that's if you don't refinance. This $112,477.46 on a $156,000 loan. Or you could do this, and this is what we showed her. On the left side is the bank side. Okay. All right. Now, I am not anti-bank. I love the bank because listen, up to a few months ago, I had 4 mortgages, but we already paid one off. And I'm so glad of that because we saved a ton of interest, right? And because the banks are our friends if we know what to do. You want to walk into the bank armed with information that's going to make sure that this loan situation benefits you. All right. So I love the bank. I love borrowing money at 75% off. I love a discount. All right. So anyway, here's what we're talking about. $156,500 over 30 years. The bank wants $112,477.46. We showed her how she can use her same budget and not sacrifice lifestyle and only pay $28,050.40 and pay off the whole shooting match in 6.7 years. Can you imagine the tears that flowed when she saw this? Can you imagine? That's what we're talking about, folks. That right there is what we're talking about. And any of you could be able to have access to this information if you would just go to ICE10KLive.com. Click on the little button that says Get a Savings and Earnings Report, and we can give you a report that looks a lot like this with your numbers in it, so you can know the month, day, and year you could be debt-free and how much interest you can save. And in this case, $89,927.06 in interest savings. $89,000 in interest savings. What can she do with that $89,000 in interest savings? Anything she wants. But we talked to her about building her own bank with that money. Ooh-wee. That's a powerful concept. All right. So, folks, that's what we're talking about today. So we have on the stage, we have Dr. Delane. Dr. Delane, can you tell us just a little bit about who you are? And the reason why that is because we have a seminar coming up in May, and I hope you could be there because the seminar in May is May 20, 21, and 22. And we're going to be talking about the spiritual money mindset. Spiritual money mindsets. P.I.L.L Method Seminars presents Spiritual Money Mindset in May in Tennessee at the Gaylord Hotel there. Can you just tell us who you are and why a spiritual money mindset is important?
Good morning, Don. God bless you. God bless you. And good morning to everyone on this platform. I see my dear friend, Valley. God bless you. And to Sean. Listen, Don, I did receive your email. I am so grateful. Looking forward to it. I've already sent it over to Michelle. And good morning, Jared, and to everyone that is on the platform and in the room. Listen, I am Dr. Delane Smith. I'm a licensed realtor of 20 years. I'm a retired real estate investigator. Real short, Don. The reason I quickly retired is because when I decided to purchase the home where I live now in a gated community, the realtor tried to steer me to tell me I couldn't live here. But you know what? In life, there are two things, and I'm going to mute my mic. You get to choose your gate. Men that are in prison, believe it or not, they are living in a gated community. I'll say that again. Men that are living in prison that have made bad decisions with their life, with their money, they are living in a gated community. I chose to live in a free society. With that being said, no one dictate to me where I can live. I'm glad I made the decision why CEO is because when I purchased this home, and yes, went through a divorce right before the pandemic, I encourage everybody, even if your spouse is handling all of the finances, knowledge is power. You still need to understand finances. I'm so glad that my ex-husband did not marry a novice. So when I went through the divorce, I quickly kept my home done. And because it was considered marital assets, I was able, India, I heard you. I've already followed you. Your wealth is powerful. The reason is there's a lot of people that have gone through the pandemic, Don. They have no idea what to do. I came in, I met Don some months ago. I followed Don. I applied his principle. And yes, I may be alone, but I'm not lonely. But what I did was I took Don's advice. I picked up the phone and I called him and I applied what he said. I refinanced my loan at 2.875. And then I started making an additional $300 a month payment on my loan. And then when I realized that my neighbor in front of me came from California and paid cash for her house, and when she paid cash for her house, that took the value of my house up by $200,000. I am one smart Black woman. Are you hearing me?
Come on.
Okay, Don, you want to know why I come in and listen to you?
Yes, ma'am.
Today, not because you sent me the inbox, but I came in to let somebody know the wealth. Y'all, also, I'm a preacher. So the wealth of the wicked is laid up for who? The just. And I am the just. You know why? I'm faithful in my tithe. I'm faithful in my giving. Now, the reason Don have all of us in here, he's teaching us how to get rid of a mortgage. Okay, what's the definition of a mortgage? The root word for the word mortgage, mort, means death. The root word for the word gauge means pledge. I just come here to help Don to tell somebody, stop pledging to death and let's get over. Stop pledging to death. Stop pledging to death. I'm looking forward to seeing you at the Gaylords. I pass you the mic.
Oh my goodness. See, folks, this is what we're talking about. We're talking about a spiritual money mindset. And listen, Dr. Delane Smith, we're going to do whatever we got to do to make sure we're going to we're going to have my people contact your people and make this thing happen. Credit Goddess. Now listen, we're talking. Credit Goddess, are you in the room? Because I know she's busy.
I am.
Listen, Credit Goddess, tell us. You didn't have a chance to talk about who you are, but listen, talk to us about who you are and talk about the 27th and why we have powerful women in real estate and why that is important to talk about today.
Yes. For those of you guys that are joining in, thank you guys for being here. If this is your first time being here, go ahead and follow the club above. So that way, anytime when we pop up and do these master classes, I say, you will always be here. Because I know sometime, especially when it comes to math, we need to hear about 3, 4, 5 times before we get it. So definitely always tap in so that way you can fully understand what we do here and why we consistently come Monday, Wednesday, Friday, and Sunday to share this information with you guys. My name is Rosalora Lewis, also known as Credit Goddess. I'm all things credit. I'm a credit score improvement strategist, not just credit repair. I help you improve your credit so that way we can gain access to other people's capital. Because in order for us to build generational wealth, we need to acquire some assets. And I know that 9-to-5 money is not going to do so, right? So accessing other people's money is putting you ahead, right? So that way you can get this house. You can buy 2, 3 houses in your lifetime if you apply Don P.I.L.'s method, right? Yeah. Right.
Yeah. Listen,
like Dr.
We're gonna.
Dr. Lane, yeah, you don't want to be tied into a mortgage like Dr. Delaney said. That's a death pledge, right? So let's add some life into it. Let's buy multiple homes. Let's build up our portfolio. So I am the key to accessing the mortgage, so that way you can then pay it off in 7 to 9 years, like Don is sharing with you guys. I'm also a business credit consultant and the official credit expert for the Don P.I.L. Methods family. Now, what we have going on in March 27th this month, while we're celebrating Women's History Month, myself, RB, and a couple of other women experts in real estate, we're having a war event. I'm going to be speaking on business credit. We're going to have those that's going to be talking about real estate investing. WAR stands for Wealth, Assets, and Real Estate. So I definitely want you guys to tap in. I don't have the link, but I'll apply it at the top.
It's on Don's card.
Yeah.
It is?
Yep.
Okay.
It's the first link on the right.
All right. Definitely tap in. This is an event that you guys don't want to miss. Hey, Don, are you going to be there?
I hope to be there. I hope to be there.
Okay.
Yeah.
Oh, I'm sorry, Dr. Delaney.
She said, what's the date?
What is the date?
Oh, it's March 27th. March 27th.
And that's a Sunday?
That's a Sunday.
Well, yes, and Don will be there.
Yes. So we would love for you to be there. I'm going to go ahead and post the link, or you guys can find the link on Don's 10K card, and that way you guys can have access to it. But we would love for you to be there. We're just going to dive deep in all areas of wealth building. For those of you guys that are interested in real estate investing, that's there. And then also the preliminaries, getting your credit together, finances, and all things. So definitely, I would love for you guys to be there and join us. Now, it's not only for women; men are welcome too.
Well, that's what I was concerned about, because listen, it's all women. Listen, it's all women speaking, so I can still come. I just want to make sure.
Of course, you support your women. Yes, yes.
I'll be there.
Awesome.
Wow, Rose. Listen, folks, I'm a proud sponsor of this event, and you want to be there. Women and men in real estate, or anything that has to do with wealth building and a new mindset. This is what this room is all about, supporting events like this and putting on our own. So Ms. Rosalou Lewis, you're going to be one of the speakers. That's correct. I want to make sure that you emphasize that right now.
I am.
All right.
I am. I'm going to be talking about the four pillars of business credit. So that way everyone gets the full understanding of why we need business credit, why it's important, and how to build it.
Excellent. So listen, we got another person on the stage, hopefully to ask a question. And Ms. Y CEO, after this next example, we're going to ask you to comment on some of the stuff that we've heard about this morning. So be ready. So Jared, back to you, sir.
Awesome. Amazing mic drop, Dr. Delane Smith. I love the breakdown of the origin words of mortgage. Everybody, make sure that you keep sharing this room. The 22 people that have shared this room, thank you so much. Let's keep sharing this room. And if you want to see this example live on your screen, go to ice10kvideos.com and you'll be able to see this next example broken down on your laptop, iPad, or desktop. All right, Terry, thank you so much for your patience and coming on stage. Please let us know what your question is.
All right, thanks for having me. I appreciate it. I love being in these rooms. I'm relatively new to Clubhouse, and I just can't get enough of it. I have a few different phase questions. One is for Clubhouse, or for Credit Goddess. I looked at your profile, and it says that you are a consultant for NAV. I recently heard about them on Clubhouse and signed up for them. And I'm sure this has nothing to do with you, but maybe you can give me a little bit of clarity. My credit score, as put out there by NAV, is over 100 points lower than all of my other reporting models, from my credit cards to my banks to everybody. I mean, it's a little over 100 points lower than everybody. And the whole reason I hooked up with them or signed up with them is because they do business lending. So if you could give me a little bit of clarity on that, that would be awesome. My next thing is for you, Don.
Let's do one at a time, brother.
Okay.
Okay, awesome. Well, thank you for that question, Terry. I do want to ask for clarity. Yes, I am a business loan broker for NAV. And I want to know, in clarity, did you sign up for their credit monitoring?
I have not yet. I mean, I have a lot of credit monitoring across the boards. And if I need to, I can. I emailed them and they told me, yeah, we use Vantage 3, which, I mean, a lot of my other, I've got Navy Federal account, I've got Discover Card, I've got several other models that use the same scoring model that's consistently in the same range through everybody, with the exception of NAV.
Right. Okay. So I'm not able to see what you're seeing as far as like the score. And I'm not sure if it's Experian or Equifax that you're seeing, but let me address this. When it comes to your credit score, it's an algorithm. It's a mathematical calculation to then calculate what is on your profile. And based on the content of your profile and based on the scoring model, it will spit out a number. So you will find that there are different credit scores across the board. I always tell my clients, don't get caught up on a credit score. Focus more on building your credit profile to build that financial resume that lenders want to see. The credit score helps them determine what type of borrower you are. But at the same time, if you're trying to lend, because I do lend, if you lend, or if a lender lend, it depends on the scoring model that they choose from, and a lot of times they pull from FICO 8. So if you're seeing a Vantage 3.0, don't worry about that, because they're not pulling from that scoring model, if you get what I'm saying. So if you want to truly see what lenders see, I would suggest that you get your scores from myfico.com, because it actually gives you different types of scores. It gives you your auto score, it gives you your mortgage score, it will give you your bank score, and then the FICO score. So depending on what type of loan that you're trying to go for, like right now, which is fitting for today's room, a mortgage score. If you want to see where you are in terms of your mortgage score, you can go to myfico.com and check to see where you are in your mortgage score. So that way you can save an inquiry, because a lot of times we are afraid to go to a loan officer for them to pull our credit to determine whether we qualify for a loan or not. But if you want to see it for free, of course you have to pay for it. Anytime you're trying to pull your FICO score, you have to pay for it. Now you do get one FICO score if it's with your credit card company, if it's with your bank. They do pull from FICO, and they only give you one. But if you want to see where you are in terms of all three, that is best, because if you go to Irene needs to see what your middle score, your medium score is. But if you only have one score, you don't know what your medium score is. And pretty much what it is that the score that's in the middle, you have a high score with one of the bureaus, you have a low score with another bureau, but they want to see the score in the middle. So if you want to know where you are in terms of your mortgage score and what your medium score is, go to myfico.com, and it will definitely show you what close to what Irene will pull. It will show you close to what she would see if she was to pull your credit. Now for NAV is more like a business credit monitoring. So you want to use that credit monitoring to determine where you are as far as your Paydex score and your Dun & Brad, your Experian, and Equifax as you're building credit. So as you're establishing credit, you want to have that credit monitoring to see where you are in terms of that before we move on to the next tiers if you're building out your business credit. So I hope that helped answer your question.
Yeah, perfect. That helped a lot.
So
my next thing,
here, wait just a second, Terry. So if Terry wants a little bit more information, Credit Goddess, and so you can fill in some of the blanks, how would he get a hold of you to do that?
Oh, yeah. What he would do is you can go ahead and text your name and number and email address to the number on my bio, 888-557-5778. Yes, this is my company. So you can go ahead and text the number. And so that way we can just book a quick call. I want to see what you have going on. It's like coming to a doctor. I want to see your medical records so that way I can give you accurate answer. Than for me to just generalize your answer. I want to be able to answer it just for you. So go ahead and book your consultation, and I'll answer any questions you may have.
All right, Terry, I'm ready for your question, sir.
All right, Don. So speaking of consultations, I've been following you for a couple of weeks now, and I'm really digging what you say. I signed up for your consultation last night after being in a room with you. I watched a few of your videos. I want to question you about the flip side of this whole situation.
Okay.
Obviously, at the end of the day, if I'm the one saving the money, I don't care. But when this is all said and done, when we take a bank's income from 150,000 down to 25,000 that they just made on that deal, are they going to be too hot and heavy to do another deal with you? Or does that cause tension within the relationship? Or what's the view of the flip side of this?
That is an excellent question, and this is episode, what episode is this?
51.
This is episode 51 that we've put up. Okay, 2-hour shows. You're the very first person to ask that question. And I absolutely love it, Terry. Here's what's going on. Okay, so if you're the bank, all right, if you're the bank, the bank is in a special position where they do fractional reserve lending. Have you ever heard of that? fractional reserve lending?
No, sir.
Okay, fractional reserve lending means for every dollar I have on deposit, we can lend out between $7 and $9 for every dollar I have on deposit. That's fractional reserve lending.
All right. I've never heard what it was called, but I've definitely heard that concept
Okay.
many, many, many times.
All right. So, all right. Now, I don't have current numbers now of how many mortgages there are in the United States. There are millions. I mean, millions upon millions of mortgages right now. And Terry, if I'm a bank, all right, and I lend you money and you return it to me early, what am I going to do with that money?
Lend it again and again.
Lend it again and again. For every dollar you give back to me, I'm going to lend out 7 or 8. All right. And I'm going to lend it to somebody who is not as educated as you on why they should prepay. So if I'm the bank, do I care if you return the money to me early?
I don't know.
No.
Depends on if you want that other 125,000 that's supposed to be in there that you got.
Well, see,
in there.
That's $125,000 that I missed because of you. But because of you, I get my money back, and then I get to lend out $7 or $8 for every dollar you give back to me early. And I'm going to give it out to people who don't know as much as you. So again, I'll ask the same question. Do I care?
I mean, with that concept, I would say no.
Exactly.
And I mean, that's why I like being the dumb guy in the room. I want to surround myself with everybody that's smarter than me.
And here's the other thing. On your mortgage note page, okay, on your mortgage note page, it says, let me see if I can pull this up. Let me get this. Let me go here. I'm going to find out, and we're going to read this. All right. And everybody asks, a lot of people ask this, but we're going to go over what it says on your mortgage note page, word for word. And it's something similar to this. It may not be exactly this, but it's going to be something similar. Terry, are you ready?
I'm ready, Don. Hit me.
This is what it says.
Not too hard.
Okay. Now, this is what it says. It's called the borrower's right to prepay. The borrower's what?
Right.
The right to prepay. It's in your contract. Let me tell you how strong this contract is that you signed for your mortgage. You want to know how strong it is?
Ironclad.
Miss 3 payments, and you'll find out how strong that contract is.
Exactly.
So if it's strong on their side, is it also strong on your side, sir?
I don't know.
Okay, let's talk about that. A contract is
I ran a unit for my building, and my contract's about 100 pages, and it's all saying I'm screwed, I'm screwed, I'm screwed, I'm screwed.
All right. All right. So this is a good reason for you to be here. So we can help you understand what's going on in your contract. Okay. Because you're right, Terry. A lot of people are so happy to get the keys to that building or that house. They sign a bunch of stuff that they never read. Okay. And I get that. But here's one thing I want you to understand that's on the mortgage note page of your contract. It says something like this: I have the right to make payments of principal at any time before they are due. A payment of principal only is known as a prepayment. That's anytime you pay early before the next payment. Okay. It goes on to say, when I make a prepayment, I will tell the note holder in writing that I am doing so, meaning you will let them know that you're making a prepayment in the way that particular institution wants you to let them know how they want, how you're making the prepayment. So each institution has their own rules. So once you find out what their rules are, follow those rules and you can make a prepayment. Okay, going on. I may make a full prepayment. Now, what do you think it means by full prepayment? It means you can pay off the entire loan. And what was the first sentence? Borrower's right to prepay. You can make a full prepayment or partial prepayments without paying any prepayment charge. So with that paragraph there, that you can pay off the entire loan or you can pay off part of it, and it's in your contract. Do you feel a little better about it now, sir? Terry, if you're there, you're speaking, you're on mute.
Yes, sir. I'm here. I'm sorry.
Okay.
I'm sorry. I had somebody walk in on me.
Okay. You want me to
question?
You want me to repeat
Please.
it again?
Please, sir.
Okay. So I was saying this. Did you hear what I read? And do you feel better about it?
Yes. Yes.
Okay. So did you feel better about paying off the loan early now?
Oh, I got no problems with it. There's thousands and thousands and thousands of banks out there.
Yeah.
It's just
okay, because
if you make a good relationship with one,
yeah,
does that keep it good? Do they say, touche, good job, you found the way around this, now get out there and buy some more houses? Or is it just best to start looking for another bank for the next deal?
All right, now that's a good question, because I do have, and hopefully they will be in Nashville with us. I have a young couple who I met in 2008. Next year, they will be paying off their 4th mortgage on our program. Okay.
Perfect. Well,
and
like I said, I signed up for my consultation last night, so I'm just waiting for my phone call.
Here we go. Here we
I'm
go.
ready to start saving.
All right. And here we go, sir. I'm going to read this third paragraph for you. And this is the powerful one. The note holder will use all of my prepayments. How much are your prepayments?
All of them.
They will use all of my prepayments to reduce the amount of principal that I owe under this note. If I make a partial prepayment, there will be no charges in the due date or in the amount of my monthly payment unless the note holder agrees in writing to those changes. There can be no changes in this contract unless both parties agree. Wow.
Now, is that nomenclature that is by law in every contract? Is that something that's put in there as a loophole for the banks?
Okay.
Or
see, don't look at it as a loophole. Look at it as something everybody should have understood from the beginning, sir.
Payment terms.
Yes, it's the payment terms, because the payment terms that you're used to are part of the contract. You must make that payment on time every month. So look at this as you should know this as well as the payment terms that the bank expects from you. You should know what you can expect from your bank just as well. And we're here to help that along. What do you say, Mr. Terry?
I say I love it, man. I appreciate the info. I appreciate the knowledge. And I'm patiently waiting on my phone call.
All right. Okay, folks, listen. What time is
Don?
Yes.
Where did Terry go to get to get his appointment?
All right.
He makes it easy. There's all kinds of places.
All right. Well, in this room, you can go to ice10klive.com. It's pinned at the top of the room, ice10klive.com. Click on that button that says get a savings and earnings report. When you click on that button, follow all of the directions, because we're going to need to verify your cell phone number. When you click confirm, wait to get the code in your as a message on your cell phone. Get that code, input the code into the website, and then we will let you in to the form. Fill out the form, and once you fill out the form, someone from my office will contact you and then set up a consultation just like they did for Terry. And once that happens, you will know the month, day, and year you could be debt-free and how much interest you can save. And then taking that interest, you can become your own bank. I'm telling you, that is a powerful, powerful concept. All right. All right. Listen, folks, we're coming up to the end of another fabulous show. This is what is again, I forget the episode. This is episode 51, almost coming to a close. I want to thank every last one. But before we go, we had some fabulous information from Dr. Delane Smith from Credit Goddess, and Dr. Delane Smith talked about how a woman who was divorced can now have power in her hands when it comes to understanding finances and the borrowing and lending and all of that. And Miss Y CEO, is that important for women to know? And did you have, what do you know about all of this?
Just a little bit, Don. You know, my sister down there, woman of God, Dr. Delane, really spoke to my heart because I went through something extremely similar. And when the bank said, you don't have any rights, you're just, you know, a signee, you're just a co. And I said, yeah, but I'm legally able to see everything that's going on. It's like, no, we're under no obligation to speak with you. I said, well, we'll have to see about that. So I went and got the biggest, baddest bulldog in the yard, former attorney general for the great state of Ohio. And we filed a class action lawsuit. It turned into a class action after I filed, but it was just me at first. It was kind of scary. So I had to file suit against a very, very large bank, whom I will not name, the largest bank in America. And long story short, I won. And what that did is it changed the law in the state of Ohio for co-borrowers, i.e. wives, women, so that if your spouse enters a legal financial contract, i.e. a mortgage, whether you sign or not, you are still equally entitled to that property. Because what I didn't know is even through community property, through divorce, it still doesn't mean that you have a legal right to that. It's really it was, past tense, up to the bank to decide if they wanted to do it or not. It was optional. I said, no, you don't. That means that if he messes up, it gets put on my credit and I still don't have a say. And that's exactly what happened. I didn't even know the home was in foreclosure until it popped up on my credit. I said, what in the devil is this? And the only way to get it off is I had to file a lawsuit.
Wow.
I said, I've never missed a payment. I was the one making the payments before. You didn't know it, but I was the one paying that mortgage, making sure it got paid on time. So because of ill intent, you know, we pray for them, it ended up in foreclosure. Wow. I've imagined looking at your credit, applying for a home, and you got a $500,000 debt on your credit, and you trying to figure it out. No. I've always paid my bills on time.
Thank you.
So that's what I had to do, and it took a whole year. So thank you for asking me that. It was a very painful year, but it was also an empowering year.
Thank you. Thank you, Credit Goddess. Thank you, all the women on the stage. Thank you, everybody. Listen, we want to curate a stage here where we are bringing information to you that is powerful information and from all sectors of our society. And I'm telling you, you got some very powerful women here that are doing their thing. And we want to support all of our clubhouse and our clubhouse moderators. Please give them a follow. But Jared, thank you so very much for being here and running this whole show. It's time to do our moderator outros. So let's let everybody know how much we care about them and how much we appreciate them.
Yeah, no, thank you everybody for being here. If you haven't done so already, join us. We're here Wednesday, Friday, and Sunday this week. Monday, Wednesday, Friday, 8 a.m. Eastern time. Sundays at 9:30 a.m. Eastern time. We'd love to see you back here. If your hand's raised and you haven't been able to come up, please come to the room early on Wednesday, and we would love to bring you up quickly and answer your questions. Also, make sure to click that greenhouse at the top, follow the P.I.L.L method, and also make sure you follow Dawn. Click that bell icon right next to the follow button. And also follow every single moderator as they do their outros. Your hallway is curated by who you follow. And we have some powerhouses on this stage. So we're going to go from the bottom to the top and just have everybody do a quick outro. And so, yeah, let's go ahead and start with Dr. Delane Smith. And then we'll go Olivia, Coffee, India, Kirk, 10K, Valley, YCO. and we'll end it out. So Dr. Deline, please.
Hi, Jared and Don. I am just so excited to be here with you gentlemen on today. And I wanted to say what Wise Co. Tiffany just said tremendously blessed me. Listen, if you're in Clubhouse, if you are breathing and you have a mortgage, please make sure you follow this room every day that this room is in function. I'm telling you, the only way that we are destroyed is for the lack of knowledge. Don, I appreciate you for your voice. Thank you so much for creating rooms like this. I am Dr. Delane Smith. They call me the Clubhouse Mother, and I pass you back your mic.
Thank you.
All right, Olivia.
Hey guys, good morning. My name is Olivia. I'm a real estate agent out here in New York, assisting first-time home buyers, sellers, investors, and renters as well. If you guys have any questions for me, if you're interested in purchasing real estate or just have any type of question in regards to real estate, you can reach out to me at olivia10k.com. I have all of my information there, my websites, my Instagram, where I show most of my work and everything I'm doing there. Again, what a wonderful room. I also want to shout out Dr. Smith for being amazing and really like preaching the word today. I really did love everything that she said, and I felt it deep in my heart. So love to have you here. And I appreciate all the moderators. So make sure you're not only following me, but definitely make sure you're following Dr. Smith and everyone else on this stage. Again, and make sure you're following the club. Thank you. I'm going to pass the mic.
All right, Coffee might be with her students, but check her out. Her bio explains all the amazing stuff she does, and check out her 10K card, coffee10k.com. India was dropping some gems today. India, please do an outro for the audience.
Thank you so much for the opportunity. It was absolutely unexpected. I am India Delgado. I am a mortgage loan originator for a small community bank based out of New Jersey. I can do mortgages in the tri-state area, New Jersey, New York, Pennsylvania. But most importantly, I am actually a community development person. I focus on first-time home buyers, but can do any type of mortgage. I teach financial literacy, and it's really important for me as a woman of color and as a minority to reach out to our communities and have them understand the home buying process, the mortgages, and just generational wealth as a whole. So once again, thank you for the invite. I look forward to communicating with all of you guys, and I will pass the mic.
Yes, yes, yes. Good to be. Thanks, Jared. Good to be back. Good to be back. Another room is done. As Don always says, it's the fastest 2 hours on Clubhouse. Again, my name is Kirk Nugent, former missionary and IT executive turned content creator and live video coach. I've been given the title of Geek Speaker Preacher, and it really embodies my passions: technology, media, speaking, and ministry. While I'm growing intentionally on a number of social media platforms, my primary focus is on YouTube, where I teach small businesses, entrepreneurs, and faith-based entities how to harness the power of live video. Your live stream is your digital storefront. Don Daniel is a perfect example of that, and we're excited to partner with the P.I.L.L method. If you want to learn how to harness the power of live video, tap in with me at kirk10klive.com. Thank you so much, and I pass the mic to 10K Cards.
You know, I sat in this room for the entire session, Dawn, and I had so many aha moments, because I wanted to ask myself this question. I said, if it's the same principle being discussed for 50 episodes, the clients may not be so inclined to be in the room. But
The Matrix has him.
without fail, every episode that you hosted in the room with the awesome team, something unique came out of each and every room. So I just want you to come to the room, guys. Always come with an open mind and come expecting to learn something new. Because what I took away from this room session today, Don, it doesn't matter what the interest rate is. You're teaching people how to actually cancel that. Once they can be very smart with their timing, they can eliminate a whole lot of extra interest, and that basically add back to their bottom line. So I just want to say, from the House of 10K Cards, we took away a very powerful nugget today. And most importantly, every time that you have a room open like this, Don, I encourage everyone to share it, because someone needs to hear this information. Dr. Delana said it best. We perish for lack of knowledge. Well, get the knowledge, get the wisdom, but most importantly, take action, guys. So today, make sure you take one step closer to making yourself, your family, and your friends financially free. That's it.
All right, all right.
I love that. This room today, the room is always powerful, but I just love as different moderators join us just to add all of the various juices and just makes the room even more spicy. My name is Valerie Sears Jones. I'm a licensed realtor in the great state of Texas. We love helping buyers fire their landlord. And if you are looking to purchase a home, hit me up. You can get in my group, DFW Fire Your Landlord. We also work with sellers and investors to help them liquidate assets. This room is always fire. Don, you are a blessing. And we come every day just to support you and the people that need the information.
Miss Valley, we are going to be in Nashville coming up with our first seminar. I'm just wondering, is there room for a seminar such as this in your city?
Absolutely. Don, you can be in outer space. Look, all that, what they the metaverse. Look, you need to be in the metaverse. But absolutely.
All right. Coming to a city near you. Okay, CEO.
I love our family. Hey guys, as you heard it here, I do the largest bank in America and won and changed the law for others. And here's the message I want to leave you with. When bad things happen, just breathe, pray, let the Spirit of God lead you. And then you stand in your truth. And then you let God arise. And I promise you, your enemies will be scattered because the real enemy is the devil. It is not people. So just set a standard, a higher standard. And if you'd like to attend our event tonight, it's in my bio. So I appreciate the opportunity, Dawn, to be here again. And you know, you're one of my spiritual fathers. And I always call you for advice when bad things happen. And you have never once led me away from the Lord. So I'm here to tell you, I appreciate you. And your birthday's coming up. I ain't gonna forget that.
Woo! March 13th. March 13th.
Mine is March 11, Pisces, baby.
Come on.
My mother's a Pisces, yes. And Dr. Delane, woman of God, I've been following you for a while, and thank you for sowing those seeds out into this community and light, because you never know, a sister like me will come along and need to hear a word of inspiration for her day. So I appreciate you.
Excellent. Jared.
Awesome. And I'm sorry. Hey, what's up, everybody? My name is Jared Albritton. Been in tech for over 15 years. I do a lot of rooms around tech, metaverse, NFTs, and crypto. So if you're interested in getting on the ground floor of some amazing opportunities in Web 3.0, you're just learning more about it, check out my replays in my bio. Also, check me out on Twitter, LinkedIn, and you can get to those easily on my 10K card. It's my first name, Jarrett10K.com. And look forward to seeing you in the room on Wednesday at 8 a.m. Eastern time. And make sure you're following everybody, follow the club, and we will see you on Wednesday. Back to you, Don.
Listen, ladies and gentlemen, thank you so much for being here today. You could have been anywhere else on Clubhouse or any of these streaming services. You could have been anywhere, but you are here. And if you are here, you heard some valuable content today. One more time in this room, and we appreciate you, because if it were not for you, if no one showed up, we would not have a reason to be here. And because you did, you are now following me. You're following the room. You're following the other moderators. You're heading over to YouTube and you are following us there. You're subscribing. You're liking the video content. And you're hitting that notification bell. And listen, we appreciate all of that. All of what you're doing, especially sharing this room on Clubhouse, you're helping to get the message out. I want to tell you folks, if all you did was hit that little button that shared this room out in the hallway, that was huge. And somebody is keeping track of all the positive energy that you're putting out into the universe. And I'm telling you, when that bread is cast out on the waters, it doesn't come back to you void. All right. It's going to bring with it something you can't give. You can't outgive God. It's going to come back to you in more ways than you can imagine. Continue sharing. Continue to work with us in getting this message out. We're going to be right back here on Wednesday. But before we leave, we can't help but mention women assets in real estate that's coming up on the 27th. We're also, the P.I.L.L method presents spiritual money mindset in coming up in May on the 20th, the 21st, and the 22nd. We're going to be there, and we're going to bring you some powerful, powerful content. I'm telling you, you're absolutely going to love it. We're going to be soon have the web page that's going to be introduced to you, and you're going to see the whole lineup of speakers. And we're going to tell you what it's going to take for you to have your face in the place. It's going to be phenomenal. All right, look forward to that. Look forward to seeing you on Wednesday. And folks, one more time, thank you so very much. Kurt Nugent, take us out.